Good morning. Welcome to the Brick Helps Real Estate Show, our special morning edition here live. I'm on a little earlier than I normally do. I usually come on at 8:30 when I do get a chance to come on live, but I've got appointments every morning at 8:30 down in Gilbert, so I'm pushing it up to about 7:15. I'm going to try and do more updates this week. We've got a lot of economic data coming out, and we'll be on Thursday afternoon live as well, and try to just kind of let you know what's going on in the market. And it's very interesting in that, there's, oh, it's bad. It's really bad. And it's really not that bad. And when I say bad, it's certainly turning around for buyers. That's for sure. That's not bad. It's been slow for real estate agents. That hasn't been fun for a lot of agents just because of volume. We had a crash in transaction volume in 2024, and it really hasn't picked up much, but we've seen kind of a bottom right now. And I'm going to illustrate and show you some numbers when it comes to that and show you what's selling, what isn't selling. And, as I track on my 7-day moving average every morning, I pull up an Excel spreadsheet and I put in how many new listings came on, how many homes came back on the market. Surprisingly jumped up to 900 this week. That kind of surprised me. And then I subtract canceled. That number jumped a little bit. And then I subtract the number of expired listings, and that one went up as well. And because of that, my chart kind of looks like this. And it shows you that these yellow bars down here are the number of new listings. And here's the number of new contracts. Now, they're still holding kind of steady. It looks like we've established a floor of about 3,000 contracts every 7 days. And because of this, I said last week, I said, based on what I'm seeing, I'm projecting that new active listings for this week are going to drop. And lo and behold, they dropped right here. Now, are they going to continue to go down? Well, seasonally they do, but I really don't know what to expect in the next couple of weeks. If I were a betting man, I think we're going to kind of level off right here. I don't see us having a spike, a huge growth in active listings, but I've been wrong before, so we'll watch it together. But when I look at our new listings, not new listings, but our active listings seasonally, we do tend to go down the summer. Now I'm going to take out 2021 because that was just the silly season. I'm going to take out 2022 when we do a comparison here, because this went up, because that's when we went from 3% interest rates to 7%. And the iBuyers said, oops, this is looking bad. Let's try to sell as many homes as we can. Get them on the market quick. Let's go. And so that really made a mess of those numbers. So let's go back to pre-pandemic levels, 2019. And you can see in the green line that listings kind of came down seasonally. We can see the same thing occur here in 2018, 2017. Let me remove those other charts so that it doesn't get that busy. 2016, you can see that seasonally we came down. 2015. So I think I've made my point there that as we get into summer, active listings tend to drop. But we're anything but normal right now, and it's hard to tell. One of my favorite charts that I like to look at, and Cromford, bless them, they don't update it as much as I would like them to. Sometimes I keep clicking on it saying, when are they going to put the new month in? And they did. They put in the May data here. And here it is. It shows you, see that blue line there? That's supply. And the red line is demand. And there's a gap between the two. Demand is trying to catch up to it, but the supply has been outpacing it. That puts downward pressure on pricing. Real estate pricing is all about supply and demand. Nothing sums it up better than this chart right here. So if you're looking at pricing your house and you're putting it on the market, you can't get aggressive. That's what it's showing you. Now, having said that, there's certainly a lot of chatter out there about just how bad things are. And I want to illustrate something here. This weekend, anecdotally, wasn't bad. Social media real estate agents posting, had 3 listings go under contract, wrote an offer, got it accepted. We had a good weekend. It's like, wow, what changed? And when you see the numbers, that I post up there on a 7-day moving average of 3,000 homes going under contract. And then you read comments that say, nothing's selling. Well, this is what it looks like, folks. Nothing's selling. Those are the green dots and the orange dots. That's pending and under contract. Those are the real numbers right there in our valley. That's how many homes have gone under contract in the last 7 days. So when you hear the comments that say nothing's moving, nothing's selling, well, here's what nothing looks like, folks. That's a lot of green dots, I'll tell you what. Now, it used to be back in 2021, we only had 4,800 listings out there, and we were selling, 4,900, 5,000 every 7 days. So we were gobbling up more than was coming on. People were lined up in the driveway. In fact, Jessica went out to look at a home this weekend. She said the price looked great. It was under $400,000. She couldn't believe it. But they were only holding showings between 10 and 1 on Saturday and Sunday during an open house. You couldn't get an appointment at any other time to show the house. So she went out to preview it. She said she pulled up and there was a line in the driveway. And because it was under $400,000. But then at a closer look, she said it was in terrible shape. You could tell right away when you went up that it needed a paint job, it needed a roof, and it was in Gilbert. But people lined up. They recognized the price and said, let's go. And they wanted to see it. Many were probably very disappointed at the condition of the home. But it shows you that there is this pent up demand out there that is trying to find an opportunity to get in. And they're waiting. And everybody's sitting on their hands and waiting, except for what I just showed you, about 3,000, 3,100 a week. Tariffs are throwing a fear factor into the market. Our rate's going to go up. Our rate's going to go down. The bond market's sitting back going, we're just not making a move here. There were a couple economic data points last week that you would have thought would have moved the bond market. And the bond market, bond traders are just saying, you think buyers are sitting on their hands? We're sitting on our hands. We're not trading at all. But this is forcing sellers to reduce their price. And you can see that that spiked up from 3,386 last week to 3,688 this past week. So price cuts are the rule of the day. If you're coming in too hot, you're going to have to face reality sooner or later. Again, depends on your neighborhood. We're seeing some wild stuff out there. Also keep in mind that, riding low offers may not be your best move. It may be your best move to get seller concessions, have somebody help buy down your interest rate, or get seller concessions when it comes to helping with closing costs. So coming in with a more reasonable offer and getting concessions, because the average concession is about $10,000 now. Believe it or not, the average price cut is about $20K. So there are people coming down and coming down hard. So we'll see what happens. Here is the average list price per square foot for buyers. This should be encouraging to you. It's actually coming down a little bit. It started out hot for the year, right? Always does. See that? January, February. It's a good year. Here we go. Yahoo, let's get it. That's not quite working out. Let's lower our asking price. And that's what we're seeing, what we're feeling when we're out there on the street. This is right here, our contract ratio, which is, of the homes that are out there, how many are going under contract? It's measured as a ratio. And see this white zone here? This is the balanced market. And that's where we're at. We're not in the cold market. We're coming up. We've been coming up the past few weeks, 33 contract ratio up to 36.5. So that's why I asked the question, have we bottomed out when it comes to contracts? The elephant in the room is, will there be a spike in inventory? Is that going to continue to grow? And as we saw this week, it doesn't look like it. I'm trying to change this chart while I'm talking to you here. I don't see it yet. We might. I don't know. There's so much news out there that's pending, that's coming out. I think we're getting CPI numbers this week. I think Chairman Powell, I think he's speaking on Wednesday. So there's going to be a whole bunch of holding their breath this week, waiting for that, see what's going on. Here is our listing success rate. That has dipped last week. You listed your home. Did you succeed? Well, probably not. I mean, we saw a spike in expired listings, which was 900, not 1,900. I apologize. I spit out a wrong number last week. Hope that didn't throw too many people off. Looking here at the sales per month. Now, down here, obviously, we're in May, so it's pretty slow. But if you look here and you see that we had 6,928 sales in April, let me go back to last April and find that in June, May, April, right here. We had 6,958. So we're just about at last year. If we go to the year before that and we go to April, we were at 6,316. So when it comes to sales per month, we haven't fallen off a cliff. We seem to have gotten down to this number, except for the holiday weeks where you dip down to about 2,200 sales. And guess what's coming? Memorial Day. It's going to be dismal. Don't tell your realtor to hold an open house on Memorial Day. That's one of the slowest open house days ever, folks. 3-day weekends, it starts to get really warm down here. People are out doing stuff. They're going to the White Mountains. They're going to Flagstaff. They're going to Sedona. They're not going to open houses. Every time I've held an open house on Memorial Day weekend, I've just kicked myself. You're sitting in there. You put your signs out. You're waiting. One person, maybe two. It's terrible. Please don't tell your agent to ruin his 3-day weekend and have an open house at your place. If it was productive, I'd tell you, let's do it. But the best day, the absolute best day for an open house, Friday after Thanksgiving. Unbelievable. You got people coming in from Wisconsin, from Minnesota, from Canada. Maybe not so much Canada this year. They're a little bit pissed off at our president. Chris here saying, what's the comparison inventory this year compared to 2009, 2010? Well, I'll show you that, Chris, but keep in mind, in fact, we were talking the other day, we were laughing, saying, we're going to ban 2008 from our conversation. That was an anomaly. It just, everything fell off the map and we had a financial collapse. And we aren't seeing a financial collapse now. We aren't seeing loans that were packaged poorly. Remember, you could fog up a mirror and get a loan. I could walk in and say, I make $85,000 a year. I didn't have to show them anything. I just had to say it. Okay, sign here. So putting 1% down. Loans were adjustable. You were coming in at 1%, and the prevailing rate was actually 7%. Well, guess what happened in 2 years? It went from 1% to 7%, and people said, oh, what the heck happened? Well, here's what happened. 2008, I'm going to show you the graph here. Inventory spiked up to 56,000 homes. We're at 26,000 now. Then they eventually started coming back down as investors came in and said, okay, that home that's dilapidated where people took everything out of it, all the copper, all the appliances, all the ceiling fans, we'll take it off your hands. And they were finding bargains out there and they were paying cash for them, scooping them up and converting them into rentals or flipping them and selling them. But this is what happened. So are we going to go from here to here? Well, I don't think so. Unless we have some type of severe financial calamity. And I don't see anything on the horizon that tells us that we're getting there. We have interest rates that are sitting here about 6.9 right now, as you can see on the ticker below. That is considerably higher than where we were the past couple of years. Not enough to upend banking. The banks collapsed. Lehman Brothers collapsed. The Fed had to come in and bail everything out. You couldn't sell anything. And then what happened was in 2009, 2010, so many people had to give their homes back to the bank that we lost our pool of buyers. You couldn't buy anything for years. You no longer qualified. So hoping for a crash, you run into those kind of things. Now there's a lot of people sitting back holding onto their cash now and hoping for that, but hope is not a strategy. It may happen. I don't know. Reventure Consulting is still predicting a crash. We are on year 5. Go, man, go. We'll see if you're right this year. So far, you haven't been right, and we're rooting for you, but we don't know. Chris here says we don't need to get to 2008 inventory. Prices were falling the next few years with lower amounts of inventory. That's what I was getting at. I agree, Chris, but I think they were falling because, like I just said, nobody qualified. Nobody could get a loan. The pool of buyers couldn't do anything. They just, they walked away from, some people bought 2 and 3 homes during that period and they walked away. I picked up a foreclosure in 2000 and I want to say 9, I think. I got it at Fountain Hills, got a really good price on it. This guy that was called a strategic foreclosure, He went out and bought another house, and then he just let this one go back to the bank. So he wanted to make sure he got into his house first, and then he foreclosed on that one. And you sit there and go, how can he afford to get another house when he's got this big house in Fountain Hills? Well, those are the kind of loans they were giving people. He got the house. He got it at a low interest rate. Now, I don't know if he ended up foreclosing on that one, but it gave me an opportunity on that house. Our foreclosures now are just like we're pre-foreclosures, only 441 homes this week. So it's not really a big number. But Chris will watch it. We have to watch the inventory. And again, let's watch the sales. So right now, sales they seem to have hit a floor at 3,000. Let's continue to watch together and see how that changes. And I'm glad you're on top of it and taking a look at it. And let's just, share those numbers together. And if you haven't yet, sign up for my newsletter. It comes out every Monday morning, 7 o'clock. This is what it looks like. It's formatted to look really good on your phone. And so what I do is I copy what comes out on Friday with the Cromford market and update you. And then I put in some of their data that they have here in their commentary. And you can see I've got that listed here. I give you a snapshot of what's going on with mortgage rates and their commentary and news. And then I offer you something incredibly valuable, my opinion. That makes people unsubscribe. But for example, this week I said pricing a home correctly is an art, not a science. I read many comments by people who've listed their homes with no success saying they are comped correctly. No, the market determines the price, not the comps. I can't stress that enough. I'm comped correctly. Well, if you haven't sold it, you're not priced correctly. You may be comped correctly, but you're not priced correctly. And so that's why I say that the pricing of a home is an art, not a science, especially in challenging times like now. Now, as we get into the month of May, this week, that's going to be very interesting to see as we update the numbers next Monday where our active listing inventory is going to be. Is it going to come up? It's going to flatline. It's going to drop as we get through Memorial Day weekend. Mother's Day, I talked about how bad open houses were on Memorial Day. Just try hosting one on Mother's Day. Hey, Mom, want to go to an open house? No, we're going to be at brunch. So it's going to be a slow time there as well. But you're probably seeing a lot more open house signs prop up in your neighborhood than you've had the past few years. And a couple of reasons for that. One, we can finally host an open house because it used to be as soon as the house got listed and we went to hold an open house, it was under contract. So what was the point? So homes are staying on the market longer right now. So realtors are able to host open houses and drive traffic to that house. But having said that, only 1% of homes are sold through an open house. You do get exposure, you do get traffic, but the odds of getting a contract from an open house is about this big. 97% comes from the multiple listing service. So that's where the traffic comes from. That's where the eyeballs hit it. And people tend to, no matter where you try to steer them, go to Zillow. And I'll have to do a video on some of the internal things that are going on between Zillow and local MLSs and a place called Compass. It's just getting to be a mess out there, but you as a consumer aren't seeing or feeling any of that. And us as realtors are sitting back and just shaking our head going, what are they trying to do here? They're turning us into a hot mess. But that's a whole nother video. So I hope everybody has a great week. I'll try to get on tomorrow. I have to be in Gilbert every morning at 8:30, but only 11 more trips, and I am all done with that nonsense. So hope everybody has a great Monday, and I hope I see you tomorrow. Take care.